one of the most powerful PD arrays or fair value gaps. Fair value gaps does a lot of things. Acts like a breakup structure, if you know what I mean. We'll talk about it all into it. Acts like a breakup structure, expands the moves, reverses the moves, and as I said, it could do one more thing, is it could disrespect your movement, right? It's not, that's too tough complex to talk about, but we're gonna go over fair value gaps. So our fair value gap, they're the most easiest thing to spot in the whole thing, in the whole trading. You can see, let's just see them anytime. You can literally, you don't have to look at it. All you gotta do is just like, okay, 1, 2, 3 candles. The 1, 2, 3 candles. These are not overlapping. The wicks are the important part, right? They are not overlapping each other, meaning they are not touching each other, right? So that causes a fair value gap. It has to be a 3 candle. It can't be 2. It can't be 1. It has to be 3. 1, 2, 3. There's overlapping. You can see this one never got tested, but we were all time high. Market is harder to trade during all time highs. But what is a fair value gap? Fair value gap is imbalances where the market does a big move without leaving us some orders, right? Leaving orders behind, so when the market retraces back to it and it expands the moves or reverses the move. And why do I say that fair value gaps acts like a break structure in the market? And fair value gaps are usually one of the most key components of many ICT models or models, right? Fair values are really important part of models, right? And unicorn model as well, especially unicorn model. Without that, there is no unicorn model, right? Because what does a fair value gap do in a unicorn model? It gives us a move. It gives us a confluence that the market wants to expand down or wants to move down, right? It wants to displace, like it wants to do a displacement, get down there, or like move away from the current position we are in, right? And expand, right? So in today's video, we're gonna be talking about, as I said, I already said that, I don't know why I said this, but fair value gaps are very important. It causes 3 candles. I'm not gonna go too over it. People should already know about this. 1, 2, and let's just say 3. So let's just say it's like my drawing is kind of ass. I got that 1, and let's just say 2, and let's just say 3, right? This one has the wick like that. This one has the wick like this. This one doesn't do it. This one doesn't do it, right? You can see this one has a gap in between. That's a fair value gap, right? What now? One thing you gotta keep in mind: a lot of people make bullshit statements like, "Oh, this is a strong fair value gap right here. This is a strong fair value gap where 2 bullish candles, right? These are strong fair value gaps, right? All of them are bullish candles. These are strong fair value gaps." That's some bullshit. Everything else is bullshit. They say when they say like, "Oh, fair value gap here, fair value gap here," right? Candles here. They say that when the wicks are too close to each other, like they're too close to each other, right? See this little wick thing here. Market could definitely go down from there or go up from there, right? Expanding, right? Or reverse it. Because when a fair value gets inverse, what does it act like? To me, it acts like a breakup structure, right? To me, it feels like, okay, what does a breakup structure do? Breakup structure changes the trend, right? So if you're on downtrend, right over here, market wants to change the market will shift to the downside back, right? So you can see market pressure down. He act like now you see how the market started going lower a little bit. It didn't really go down, but it took out so much liquidity, right? It's kind of hard to explain this, but he acts like a breakout structure. Now what happened over here? This fair value gap got inverse, right? This now is another topic to go over. Inversion of a fair value gap, right? I don't like to use it as a main confluence PD array. I like to use it as a breakup structure where if a fair value gap right here gets disrespected, right, goes right straight above it, that to me means like, okay, market wants to go over here. Market wants to go like expand from here, right? Go to the all-time high and expand higher from here, right? That is for me how it acts like as a breakup structure. It acts like a breakup structure. I call it a breakup structure when I'm entering my trades. All I'm looking for is a version of a fair value gap. So if there's a fair value gap, I'm just looking for the fair value to get inversed. Once I get an inversion, I'm looking to enter the trade. I'm not going to enter out of that, not just out of breakup structure. I'm looking for extra confluence and enter out of that, right? But fair value gap, just three main points of fair value gap is to expand the move, right? Expand the move that it's doing, and either reverse the move, because if fair value gap gets reversed, what does the market do? Once the market move lower or move up higher. So if we have a fair value gap to the downside, if it gets respected, boom, market wants to move higher here. It wants to go to the liquidity over here. Market wants to go up higher from there, right? And with that, market could do a breakup structure. It acts like a breakup structure. It could say it reverses the move right over here. You could do that, or you could do this, or you could do both of them. It acts like a both, right? And one other thing is that it could get you an entrance to go to the longest side, right? If the joint liquidity is here, which on this specific spot I don't really got an entry onto, right? If I would have had an entry, I would definitely fucking took in it, right? But for value gaps, the main points are expanding the move, reversing, and acts like a breakup structure. So if I see a break, they see market broke structure down. So now market's supposed to do what? Give us bearish movement, right? What did the market do? Had a fair value gap. The fair value got inverse. What did that market do? Eventually, you can see right over here. It's like you're wondering, like, okay, now aren't you wrong? Market inverse this fair value gap, right? But guess what the market do? Market create another fair value gap over here. So that now doesn't that mean that market not supposed to move? Not that's a break back to the downside. But you can see is nothing is 100%, right? With that, what did the market do? Came right back up, closed right above this, fair value gap, made another inversion, which now this, right when it's getting inversed, this is no longer a fair value gap or a breakup structure. This is still the same thing, right? These are like this one right here, guys. Look, you can see this body candle close above it. I don't like to use a reverse fair value gap, right? This to me looks like, okay, this people still count as a fair value gap. Like, okay, this now is a bullish fair value gap, right? It's a bullish fair value gap to the upside, because right, see, got inversed to the bearish side, the market pushed right back up, right? Close above it, and now this acts like a bullish movement when it changed to a bearish, right? So market broke right back up, and with that, it acts like it. It's not an actual breakup structure, but it acts like it, right? Where it gives you like a little bit more confidence in your setup, gives you more confidence on your thing that, okay, you might move this way, right? You can see this one, it closed above this one as well. When this one got disrespected back to this, so now this acts like a breakup structure, market inversed right back to the upside, now more bullish maybe, right? And you can see throughout the thing, right? You're probably wondering, if you go to the lower time frame into that fair value gap, probably wondering like, okay, what happened during that fair value gap? Well, this is actually a breakup structure. People or am I supposed to take bearish movements out of them? Or am I supposed to take sells from this reverse fair value when it acts like a breakup structure, right? As I said, it doesn't really act like it, but when I'm executing my trades, when I'm taking a trade, it's because when I'm executing 1 minute time frame, and I either need a breakup structure or a reverse fair value gap. When fair value is inverse, that means he wants to go to my direction. Then I'm looking for harmonic conflicts. It's very simple, right? So you're probably wondering like, okay, now it just inverses fair value gap. Now I'm looking for shorts, right? Some people actually look for shorts. So now we go to low time frame. What do we have here? We have no fair value gap to take trades here, so we won't be taking a trade here. We have an hourly order block. But if you go to the lower time frame, what did the market do? It respected this, right? If you go to the lower time frame, now go to the 5 minute, although it respected that, well, this you could say, oh, okay, right? Although it respected this fair value gap right over here, I'm not trying to prove my point like, oh, I'm actually correct. Nothing is 100%, right? You can see it over here. It's trying to, but wondering like, okay, I could take a short over here, right, from this other fair value gap over here. Did the market really give you a setup here? No. What did the market do? Did it ever show a displacement down below? Did it ever broke just down? No. Did it ever create a unicorn model? To me personally, no. And how does a unicorn get created? How does a unicorn get created? From a breakup structure, right? So no breakup structure. Market just expanded here. That means no displacement. No market does not want to move down. What does the market do? Push right back up, right? Breakup structures are really important. Even when fair value gets inversed in a lower time frame, I personally like to only use FVG, a reverse fair value gap when it's a lower time frame, like 1 minute chart, when I'm executing my trades. But if I'm not executing my trades, I don't like to use it. It's too complicated for me. I don't like to use it. But how can a fair value gap expand the move, right? Let's go over how can fair value gap expand the move. What did the market do over here? Expanded the move. Pushed up high from here. What did the market do? Expanded the move over here. Really strong support area. Market do it. Pushed up higher, right? Go lower. Let's go to, back in time, right? To the other all-time highs, right? Over here. Fair value gap expanded the move, push up higher, made it push up, go higher, expanding the move, right? You wanted to market the market. If the market drawn liquidity is here, the RV drawn liquidity is here. What did the market do? Expand, lower a lot. What did the market take out? Liquidity, right? Now the next RV drawn liquidity is where? To the upside, right? Where's the next drawn liquidity? Main drawn liquidity is here. These are mounted drawn liquidity. The market go take out. Give you like a take profit to just get out of the trade. But the main drawn liquidity is here. Well, this fair value gap causes it to go over there, right? With this super liquidity, this fair value gap usually causes the move to go up there. So, yeah, that's the main drawn liquidity over there. Market went up there, right? Now, one thing we want to keep in mind is during all-time highs, when the fair value gets inversed, that usually acts like a breakout structure to me, right? That was okay. This might be some bearish movement because market just broke structure down in the hourly time frame, like not hourly time frame, in the 4 hour time frame. So with the way I say, it can act like a reverse in during all-time high. By the way, this is specifically, it could be anything universal, right? Universal, right? It could be during no all-time high, during all-time high, but during all-time high, there's gonna be a lot of fair value gaps. Why is there gonna be a lot of fair value gaps? What is the market doing? It's an all-time high, so market's gonna make big moves, right? Huge moves to the upside. So you can see it over here. Market's created a fair value gap. The only way I think that the market might reverse from this all-time high is if I see a fair value getting reversed. I always care about the first fair value gap. The first fair value gap is all I care about, because there's too many fair value gaps here. There's fair value gap here, right? I only care about the first one. The first one is, which is over here. If I see that getting reversed and become a reverse fair value gap, that to me will act like a breakout structure to the downside. But one thing to keep in mind, the market could still go back to the upside. Nothing is 100%. The market could still go to the upside. Why can it go back to the upside? Another fair value gap, right? There's another fair value gap over here. This could potentially, let's just say it doesn't inverse this fair value gap. What does the market do? Push up high from here, because market there retracement to another fair value gap. Market will expand from there, right? Be really careful with these. Is hard trading during all-time highs, and don't listen to these people, right? Don't listen to these bullshit ass people where they say, well, this is the strong fair value gap, this is a weak fair value gap, there's 4 times fair value gaps, this. When the market has a breakout, when the market has an order block buy, that is a stronger fair value gap. No, they all act like the same way, It just depends on how you execute trades. So it all depends on how you execute trades. It doesn't matter which fair value gap is strong, they're all the same. Even doesn't even matter if this wick is so small, they're all the same. If you go back in time, like, I don't want to go all the way back. It's too complicated. It's all the way down here, and I don't know how I'm gonna find that chart, right? But if you go back in time, you're gonna find out that even if the fair value gap is small, it will still count as a fair value gap, right? It's not gonna be a weak fair value gap. It's not gonna be a strong fair value gap. It's still gonna count as a fair value gap. Can I show? Is there an example I can show over here? Do I have an example here? I don't have an example here, but I definitely had an example before, but I wasn't prepared for this video. Just said raw action. But everything is fair value to fair value gap. There's not gonna be no strong or no weak, just because the wicks is selling something else. Fair values or fair value gaps. Don't listen to these stupid ass people be like, oh, there's no weak, fair, strong, anything right like that, right? Oh, BS, right? But yeah, this is how the best way you could tell the fair value gap, like a definition of fair value gap. The best way to use the fair value gap. You want to use it for expanding. You want to use it for execution. You want to use it for models. You want to be using it for reversals, but you want to be careful because they're all-time high. Even if the fair value does get reversed, what's going to happen? Market go back up. There's more fair value gaps, right? Be careful with that. You could do all those factors I said. But if you guys got any other video suggestions, you can put it down below. And yeah, thanks for watching. Join the community, subscribe, whatever you want to do. Just join Discord, link down in the bio. But one thing I gotta say before we end of the end of the video is tomorrow. I don't want to be talking about the topic tomorrow. Tomorrow's gonna be a unicorn model, right? So tomorrow we're gonna be talking about the unicorn model, right? How can you use the fair value gap that we just talked about? How can you use the breakout structure, not breakout structure? How can we use the breakup block and the displacement we talked about in this video and yesterday's videos, which was the breakup block video, and putting it into a model, which is the unicorn model, right? How can we mass it up to a model? How can we use it? How does IT use it? And yeah, thank you for watching.